Hi, I'm Joseph Falbo, Certified Financial Planner. Today we're going to talk about low expectations having its advantages. Now, we all want desirable outcomes, right? Those outcomes that bring us happiness, peace, prosperity. And because we all desire those outcomes, we have to go into situations we may go into situations having high expectations. But it may be more beneficial to you to temper our expectations if we want to experience greater contentment in life. Let's talk a little bit about disappointment. Disappointment occurs when a situation or outcome is worse than we expected, right? So by intentionally setting expectations low, intentionally, such as expecting long lines when you go to an airport, maybe today especially you think of a flight delay before you go in. So we decrease the likelihood of becoming disappointed or angry when life actually happens. Now let's talk about contentment, people that are content. On the other hand, that results from situations or outcomes that exceed our expectations. When we lower our expectations, we put ourselves in a position to be pleasantly surprised a lot more often, such as when you show up to the airport and you go right through security and your plane is there a few minutes early. Now, when we set expectations for something, we should consider how much control we have over the situation. That is key, right? If we have a great deal of control over the situation, we may feel confident in having high expectations for ourselves. But when things are out of our control, things that we can't control, we should consider keeping our expectations low. Now, let's talk about investment expectations. Most investors want to achieve high rates of return with little fluctuation in value, right? High return, no risk is what people want. Assuming a given and acceptable level of risk, the higher return, the better. But we should be careful to keep our investment hopes and desires separate from our investment expectations. When we temper our investment expectations, we are in a better position to handle market surprises. And as we know, I've been doing this for a long time, every year the market surprises us. Now, if you have tempered expectations, it empowers us to enjoy the positive surprises and puts us in a healthy mindset to handle and adapt to the negative surprises. This is what I found, the best expectations for investors to have are a combination of realistic optimism for the long term, and you couple that with the expectation that in the short term, markets may not make sense and they may fluctuate considerably. I hope this message helps you.